Right, good afternoon, YouTube. Earlier time of 1:20 has caught me out a little bit, but we managed to get there just in time. Yeah, markets opening a little bit earlier this week, as we know, due to the daylight savings being changed in the UK a week before they do it in the US. So we have earlier data, earlier opens, earlier closes. So just be wary when you are trading that you might well get everything a little bit earlier in the day. It's not a bad thing for traders actually in this part of the world to have these weeks. We normally get 1 week of it in the autumn and a couple of weeks of it in the spring, and it means you can end your trading day a little bit earlier. No bad thing getting that morning condensed a little bit. So what happened today? I've got the FTSE chart up in front of me today. Month beginning is always pretty interesting. Obviously, there's net inflows you often see from pension funds at the start of the month. Everyone who's been paying into pensions over the course of the month have to have those funds invested in the market somewhere, and a chunk of that money is finding its way into the stock markets these days, as you would expect. So when the market opened on the FTSE here at 8 o'clock this morning, we had a little nip lower, about 6 ticks on the open, just grabbing a little bit of liquidity. Yeah, but within 15 minutes or so, we were up a nice 41 ticks, and a pretty directional move for those first 15 minutes up towards this high volume area. So a nice early trade by a lot of us in the market this morning. I think a lot of people on the discussion group, by the sounds of it, got hold of this as well. So well done for those of you who did. If you're still holding it as well, you're doing even better than I did. We just continue to see this kind of grind higher in stocks. And this has been kind of exacerbated a little bit by the move that we're seeing in the dollar. I'll bring up my risk screen, you'll be able to see a little bit more of that. Nice downtrend in the dollar all day today. Really, yeah, from when it opened, we've been in a pretty continuation move to the downside. That tends to soften to enhance the strength of the stock market at the moment. Decent correlations, inverse correlations between the dollar and stocks. And similarly with the bond markets rallying as well, that tends to drag the stock markets higher too at the moment. So yeah, decent start to the day. As I said, BP earnings were probably one of the big catalysts for this. BP reported earnings of quarter on quarter of $8.2 billion. So they're not the only oil giant who's reported pretty punchy earnings. Obviously, Shell last week did the same thing. And that also created a nice, I think it was about 60 tick rally in the FTSE in the first half an hour. So understanding when these earnings come out. And yeah, if you can get that kind of mixed together with correlating markets, if the dollar's weak and bonds are up and it's month beginning and there's been good earnings in a major component of the indices, then you might well see some upside, and that is exactly what we've had so far. So a kind of nice cocktail this morning to make things easy. It's not always quite as easy as that. So yeah, pretty pleased to see that action so far today. But today is also the start of the Fed meeting, right? So this is really where we start to see markets kind of poise themselves for tomorrow night. We obviously have tomorrow night things out a little earlier, 6 o'clock, for the FOMC rate decision. Comes up with the statement, and then half an hour later at 6:30, the earlier time at 6:30, we have Powell on the wires to inevitably get things going. That tends to be what has happened to the market. I think 5 of the last 6 meetings within that kind of what's normally 7:30 to 7:40 time print. That tends to be the low, and we get a nice push to the upside. Powell has his silver tongue and manages to get markets going more often than not. So we'll see if we have that tomorrow night. But that's one of the reasons I'm talking about this today is the meeting starts today. But moreover, markets are often a little bit coy ahead of this news. This is obviously, along with CPIs at the moment, probably the biggest mover in the market. So is anyone really wanting to overposition long or short of these prices? I'm not sure. I mean, I wouldn't be if I was kind of a medium-term trader. If you have a look at the S&P 500, I mean, really since those lows, this was on the previous CPIs, actually, that big sell-off before we got bought back up on those option hedging trades. And since then, we've been in kind of a nice, it's a bear market rally. It's not significant enough to turn it into a relative bull market. But yeah, decent bounce back from those lows. And yeah, it's quite clear to see the net positioning is probably a little bit on the long side, you would say, given that we're as high as we've been really since over a month, 6 weeks or so ago, 20th September. Looks like these highs are going to get swept at some point today. Might be some stops above there they'll like to take out. So we'll be watching that with interest. But I think the reason I'm talking about this is really with an eye on tomorrow. And I'm talking about this as well because you'll see in the description below this video, we have a link to our Zoom that we do during the Fed. So from 10 to 6 tomorrow night, myself, Jerry, and Neil will be with you live for an hour and a half or so to trade straight through the FOMC decision, through the press conference, and try and pick out some of the key takeaways from what Powell is saying. And if he does say something that's a little bit more dovish than the market is anticipating, then you might well see some pretty nice action to the upside. He has had a tendency to do that of late. So let's see what we're thinking with that. If we also have a look, I know Jerry popped us on the discussion group today from Gagavin. I know this is a JP Morgan one that he's picked out, but this is kind of a run through of the potential moves in the rates tomorrow. And what impact that will have on markets. So you see this 50 basis point hike, which is less than the market's forecasting. In fact, if I quickly take you to the Fed funds futures rate, this tells you what the expected positioning is between. This is actually falling a little bit today, actually. So we had this 84% chance of a 75 basis point hike. And even as early as today, it was as low as 12% chance that we'd get only a 50 basis point hike. But that's obviously increased up to 16% just with the action we've seen today. That's probably why we're seeing a weaker dollar, higher stocks today. That's something that you want to be paying attention to as we get towards the data. But it's creeping higher, this probability of a slightly more dovish approach. As I say, I want to show you the impact that these may have. So JP Morgan have suggested that if we do get a 50 basis point hike and with a dovish press conference, then they're suggesting that we might well see the S&P up 10 to 12% on the day for one-day returns. So double-digit one-day returns aren't something we've seen for a while in stocks. That would be the most dovish of scenarios that we can think of. I can't quite see it myself. They may do a 50 basis point hike, but I think they'd be a little bit more cautious with it if they did. But even if this was the case, they still feel with a 50 basis point hike, we would see the S&P up 4 to 5%. More likely, it feels like maybe a kind of 75 hike, which is obviously what the market's pricing in with a 84% probability. But then you've got to run through the scenarios of how dovish, hawkish, neutral the press conference is. Dovish, they see another gain up to 2.5%, 3%. Albeit if it's slightly more hawkish, then we will see it down a little, albeit not that much. And if we do manage to miraculously get a full 100 basis point hike, a full 1% increase in interest rates, given that CPI prints were higher than forecast again, perhaps this is on the table. It certainly was in the immediate aftermath of the CPI data. But as we've seen since then, there is actually a higher probability of solely a 50 basis point hike. But this is the sort of thing that could crush the market 4 to 5% down on a kind of dovish 100 basis point hike, if you can imagine such a scenario, and a hawkish one. We can see 6 to 8% down. So I feel like I'm kind of between these two. I think we will get a 75 basis point hike. How dovish or hawkish will be the difference. We'll wait and see tomorrow. There's no point kind of making decisions on this. We'll see what we see, and the markets will react accordingly. That's one to look at as we move forward through the day. As we move forward through this day, however, we've got a few more bits to get our teeth into. We have two pieces of data. Well, there's a few more pieces of data actually, but the big headline ones are the ISM data for the manufacturing PMIs. That's out at 2:00. At the same time, we also, with it being jobs week, the first week of the month, we also have the JOLTS jobs on Tuesday ahead of the non-farms on Friday. So what has been the average miss with these? We've seen about a 1.4 miss on average over the last 6 months in the ISM. So you maybe see something a little bit more than that to shake things down. And similarly with the JOLTS, it's been about 500,000 miss on average over the last 6 months. So maybe we need to see a 10.25 or above, or a 9.25 or below to justify any trades in that scenario. But there's two pieces of data out at the same time, which always conflicts things. So perhaps if both of these are green, both of these are red, you might get a trade on. We've actually just been chatting in the office a bit today about the relative reactions. We've been talking a lot over the last 3 months or so about good news being bad news. There are signs that might be coming to a close soon. The Chicago PMIs yesterday were bad and the market went down. GDP was better, the market went up. So there are some suggestions that maybe good news is returning to be good news again. So with that in mind, perhaps trading the currency or something like gold might be a little bit of a safer play if you are unsure whether the good news, bad news narrative is going to continue. So that's where we are with that. So I've spoken so much, we've missed the open. How far in are we? 20 seconds through, pretty unchanged on the S&P on the top left here. The Nasdaq started on a positive footing, popping the high pre-market, and the Dow is again pretty unchanged as we look forward. The T-notes, these correlations have been pretty good. The dollar probably slightly better, but as these start to weaken, you tend to often see stocks weaken a little bit too. So if we do get some aggressive selling on the bonds here, I wouldn't be surprised to see a little bit more softness in the stock market. This is the first trading day of the month, and as we saw with the FTSE at the start of the month, they did have a decent start. So, pension funds in the US still themselves have to buy US assets, so perhaps there will be some net inflows at some stage today. The area of interest for me on the S&P 500 is about 12 ticks higher than here. We've got a very key level. This was the point of control for the previous year, where the most volume was traded in 2021, and there's been a lot of volume traded on it around this price this year as well. So that's an area that I'll look at about that 3924, 3925 level, see if we can get some sort of test or breakthrough of that. And that might well give us the sort of trade that we're looking for today. But yeah, with data only being 29 minutes away, I think given the current price action, I'm going to wait and see if things come to me, and we'll see if we get that sort of move come 2 o'clock on the data. So yeah, trade carefully out there. As I say, we've got a lot of Zooms back with you in the morning tomorrow at 10 to 8. Again, 120 ahead of the open tomorrow. But then if you can join us for only one, the big one tomorrow night at 10 to 6. We'll be with you for an hour and a half or so, and hopefully you can ask some questions, get some feedback, and hopefully make some money along with us on Wednesday night. So yeah, the link to that is in the description below. So please, click through on that and register your interest to join. And if you haven't already done so, please subscribe to our channel, and we can get the subscribers up. And yeah, hopefully get more content to more people, the more that we offer. So yeah, good to see you. Thanks for joining us, and we'll be back with you tomorrow.